Hey, what's up, apes? Hope everyone's having a good evening. So here's the Solana setup. Again, I was on the road when this hit, but I was kind of glancing at it before I left for a meeting today. So what we're looking at is a 1 hour chart. This right here was a structural high, and this displacement candle broke structure. So this shifted structure to the upside. Now let's see if it actually tagged anything significant. Just doing this on the fly, but yeah, so you have a daily order block right here. And you could see it's a valid order block just because you had really strong displacement after this one outlier candle in a cluster of down candles was formed. So that's an untested order block, and that's exactly where price rejected on first test. Doesn't mean it's not going to move up from here. It just means that's an area that would elicit a reaction. Now, on that 1 hour chart, the way I'm sizing it up is market structure shift, tag that daily order block, and then push down into this 1 hour imbalance. So when I'm looking at the 1 hour time frame alignment on a market maker model, the alignment is always 1 hour to 5 minute. So then what you could do is pop it into the 5-minute chart. Here's your original cluster, push down. Here's your 1 hour imbalance, and this is where you shifted structure. Here's where the sell side of the model occurred, right up here. That was your original consolidation high, so we want to mark that out on the chart. Then here's your first Darvas box at the original consolidation, and here's your distribution right here, distribution level 1, and then level 2. Doesn't mean it can't drop one more level, and this would form another distribution box right here, effectively tagging out the last equal lows here on the low time frame and rebalancing the entire H1 IMB. So there's a potential that this drops one more level. Just want you to be aware of it. But if this is the low, typically what you want to see is any array that was created in there, which we have a 5-minute imbalance candle right here that shifted above this swing high, which you could see more on, I think it was 2 or 1 minute. Yeah, here you could start seeing it on the 2 minute, and then here's your 1 minute. So this is kind of like a shift in order flow. This is the imbalance created by that displacement candle, and then the mid or the EQ is what you want to see get defended over here. So right now we're working on it. We already had 1, 2, 3 reactions on the 4 on the 5-minute time frame, and right here you want to see it confirm, because there's really no internal liquidity to take at this point. It's already been taken. So if it holds here, you're looking for first distribution box above this high and rebalancing over here, and then the next one taking out the original consolidation. So that's assuming that this is it and there's not one more level drop over here. Now the reason why this was a pretty respectable entry, if you just map out your volume profile from here to where it entered this range to where we are today, you could see your point of control is here, which got defended and pushed off of it. Then you have a high volume node right here created by this cluster. So if you just kind of map it out to the high volume node, like this, you can see that's exactly where it bounced. So this area should get supported by volume, and it's dynamic support if it holds, because you could see that was a previous high, a very strong structural high here that we busted through. So if this is actually going to reverse, this level should get defended. So if they take these equal lows here, it should only wick into it to basically rebalance what's left on the 1 hour imbalance candle, which we'll look at right here. So you can see just below that there's a little bit more imbalance. So at this point, you're on the buy side of the curve. And if you look at this as a dealing range, where you entered this volume profile, here's your value area low, your value area high. This is outside of the value range. You basically fell below back into it. And what was I going to show you here? Oh yeah, so if you're considering this low right here, the dealing range low, and this is the dealing range high. This is your dealing range. Here's your mid. Basically, if you're bullish on Solana, you think it's going to push higher, you want to be buying in discount, which is in this gray box here. Anything below equilibrium. Anybody buying in the green over here, this is buying in steep premium. So what I normally look for is where is their dynamic structural support, which you have right here, and it's supported by volume. So that was a good entry that we got right here. Also, you want to see where the imbalance is complete. We're basically 75% complete here. So the draw to the downside is almost complete. And because it's a 5-minute market maker model filling a 1-hour imbalance, you would expect it to reverse here and then start distributing higher. So everyone who's accumulated in this range, they're going to start distributing above these highs, and then here, where you're going to have order pairing in each high, right there, there, and there. So that's pretty much the way I'm sizing up Solana now. It doesn't mean it won't collapse and go way lower back to the point of control in the range. But if this level holds, this is like your prime entry to potentially run it back up to the highs, which would be 12% move, right? If you switch it into the weekly, you could see we're basically inside of this weekly imbalance. And then there's another one right there. It's a giant monthly imbalance, which is why I marked out 81.90 as my target. I believe that if you're gonna reject, you would reject the mid, which we did right there. If you consolidate under the mid for long enough, then you would expect it to push through and then just rebalance this entire range. Because if you look to the left, there's a vector candle on the way up and a vector candle on the way down. This range right here represented by a balanced price range. So when you're below it and you enter that range, it melts up really fast. When you're above it and you fall into the range, it melts down pretty fast. So that's the idea with a balanced price range. Typically, somewhere around the mid, you find equilibrium, which is where it more or less tagged over there. So let's see how this develops, but for me, this is looking a lot like a low time frame buy model is looking to form in the range. So let's see how this holds. I'm expecting at this point, because we're below that imbalance here, either it wicks up or one strong wick down to flush out these lows and everyone who entered with their stop here, which makes more sense because if you entered here, you would have had a 1.67% stop, which is, it's bait for retail. So it looks like they're about to take it out right now. I would expect it to stab down quick, rebalance the 1 hour, and then push up. And then we could consider this our last distribution box before moving up. So now the model shifts just a little bit. Here it is, moment of truth. So again, we're now in that high volume node. This is where you expect a reaction. Boom. So there was a reaction. That's a good initial reaction, especially because these equal lows got grabbed. So that means anyone in this range put their stop likely right here. I have mine like way down here because I have another bid somewhere in this range right here, like at the bottom of the H1. Fuck, they didn't tag me yet, but who knows, they might send it down one more time. Either way, I think one more drive down and then we push up from here. Let's go.